So today we'll be talking about continuation of time zones and its characteristics with price action, the price at which you buy. As I've told you before, I said time comes first, then price follows. So when you know your time to enter the market and the time to get out of the market, then you should now look for the price at which you are going to buy. If you don't get the price action, the exact price action where you are going to buy in the market, don't buy. If you don't get the right price action where you are going to sell, don't sell. If you sell, you are putting yourself in jeopardy. Let's start from here. Wait. Let me see the one we can use. Okay, let's start from this place. Okay, let's start from here. What we have seen that what I told you before, from 7 to 9 GMT, you should be looking for your sell or your buy, right? Can you hear me?
I'm sorry, I muted myself, so I won't make noise.
Okay. Yes, I said from 7 GMT to 8 GMT, you should be looking for your buy or your sell. And your London Q zones, which is from Frankfurt time to London, 2 hours after London open. You are going 1 hour after London open and 1 hour before London open, which is 7 GMT to 9 GMT. You should be looking for your entry. That is the time. Then let's check 1, 2. Let me count. Let me do it very well. 1, 2, 3, 4, 5, 6, 7, 8. This is 8. This is 9. This thing is 1, 2. This, when this candle, we should understand how this thing works. When this candle, at the close of this candle, that is 12:59 a.m. When this candle opens here, it is exactly 1 a.m. So this will be 1, 2, 3, 4, 5, 6, 7, 8, 9. This is your highest. And once we get this highest here, highest of the day, we said if you want to search, are you looking for sell in the market? The time that you should be looking for your highest of the day should be between 7 to 9. So you got your highest here, you mark it, let the market retest back to it before you sell. And what we are looking for here, we are looking for price. And the price action that we are looking for is order block. We have 7 of them. This is ICT entries, where the bank participates in the market. Some people that are teaching with indicator or using indicator or trend, or that are using maybe breakout system. Once this neck broke, once it broke this neck, you know the market is going up, down, up, down, up, down. Once it breaks this neck, they will put their entry here. That's where they are buying from, and put their stop loss here, but it's wrong. That's too high. Maximum they can get from the market when they are looking for the stop loss will be too much, and what they are aiming at will be too low. So, but if you know that this is order block, the last candle down, the last red candle, when you mark it out, the body, you are expecting the market to come back. Never you chase a trade, expect the market to come back there before you take trade. You can place it here and just put like 10 pips below, then you buy from there, it will go up. And if you are selling the market, the last candle up, you know, it swing up, down, up, down. That's how you are getting upward trend, it will go, and downward trend. The last candle up like this, last green candle, mark body to body, and you can place your trade at the middle or at the beginning here. You expect the market to come back there, then you place your trade. Once you have that, at during 7 to 9 GMT, this is you have your 1, 2, 3, 4, 5, 6, 7. 7, you have your 7 giving you high here. Just mark the area. Then this, what date is this? This is March 1st. Okay, I've marked the area like this, the height, then go to 5 minutes. March 5th of March. Fifth of March. Go to your 5 minutes. March. No, it wasn't March 5th. Let me go back to 1 hour. It wasn't March 5th. This is March 1st, 1st of March. 1st of March. Okay. March 1st, this is it here. This is your 5 minutes. You've marked this area, the highest that you got as at 7, you mark it. And this place, this last green candle, this is your order block. Body to body. This is it here. The market is, we have a bullish market. This last, no, this is bearish market rather. This last green candle here, you mark the body, you are expecting, when the market is going down, don't run after the market, especially when it is between 7 a.m. to 9 a.m., 9 GMT, 7 GMT to 8 GMT. Mark the order block, body to body of the last candle that went up. Then in 5 minutes, then expect the market to retrace back there, then you place your sell. If you sell from when it breaks this neck here, your stop loss will be too wide. It will go, if it will be too wide and you are getting small something, you can be discouraged. But wait for it to come back, then you enter your trade. When someone that places trade here is getting like 1 to 2 or 1 to 3 maximum, you will be getting like 1 to 10. Let's see it here. My 5 minutes from here, it went down, it comes back up, and see what I get. The maximum I use as stop loss is the height of this order block. Let's check. This order block is giving me 4 pips, but the maximum I use is 10 pips. Let's say I use 10 pips, but this is 4 pips. But let's use 10 pips. Let's say it is 10 pips. Let's calculate how many pips I've gotten from there. From the beginning of this place to this place, that's 44. That's 1 to 4. At first, I've gotten 1 to 4. That's the first trade, first entry. Another one, I mark this place There are 7 price actions that I watch out for in ICT, but the first one I'm teaching here is order block. So this is another price action. It went down again. Let me minimize. This one from the order block gives me 1 to 4. If I use 10 pips as my stop loss, this one gives me 1 to 4. Then the second one gives me 1 to 10. And once I get here, I get out from the market. So if I risk 1%, I've gotten 14% for that day. If I'm trading FTMO, that means with a trade, I've passed in a day, I've passed my FTMO or any prop firm evaluation class. So that's how I trade. I don't trade with indicator. I don't trade with anything or pattern or any line, trend line or anything like that. I trade time-based analysis with price action, ICT entries. Once I know my timing is perfect. I mark the highest there. I go to 5 minutes, look for order block or any other price action, ICT price action. Then I just play it downward. I know this will give me the highest. If you do it 10 times, at least 7 times, you will win. It will be okay. Here, if you just enter once, it will be 12. But if you do it first entry, second entry, you are getting 14 from the market. Let's look at the other second day. Here, you have 1, 2, 3, 4, 5, 6, 7. You mark this area, this March 2nd. Let's go to 5 minutes. March 2nd. This is the area. This is the area. You mark this area, then all you need to do, look for the order block. You see it, the market is moving. A lot of people, once they see this one, they jump in and their stop loss will be down here. No, we don't play it like that. This order block here, let's measure how many pips. This is 6, but let's say I use 10. Maximum, it will be, my stop loss will be here. It comes back. Once it enters it, yes, see the reaction. And let's see the movement. Let's say you enter from the tip here, you got in 2.5. Then once it's coming down again, look for this order block. From this order block, this last red candle, let's say you play it from here, you've gotten 40 to this place. No, let me minimize it so that you see what I've gotten. From the top here to this place, this is 6. This is 11. This 1 to 11, you first gotten 2 here, and this is 11 to this place. Or let's say you even get out from here to this place. This is 6. 2 here, you've gotten 2 here, you've gotten 6 to this place. Then you mark this order block. When it's coming down again, there's another order block here. You mark is going, but if you wait for it, let's say you wait for it and let it play out. Let's say you want to be getting 10%. You wait for it, you will still get 10. This is 10. So when you know your timing, your time zone, it's accurate. Time-based analysis is very, very accurate. You don't have to stress yourself. All you need to do, know your timing. This is one. Let's expand this again. Which day is that? March. Let's go to March 3rd. We've done March 1st, March 2nd. Let's go to March 3rd. March 3rd, okay. This is 1, 2, 3, 4, 5, 6, 7. This is 7. We mark this area, March 3rd. Then let's go to 5 minutes. March 3rd. This is the area here. This is the last one. If you don't get this one, there are 7 of them. We have other block and 6 other ones. Here, this is your highest of the day at this place. There, when this thing is going down, it comes up again. This one, let's mark this one. I will show you the reason why this first one is not, this only one is not working. See here, it's either this one is one big, this last one with one small one, or this one that you call engulfing candle, or you can carry 2. If this one is too small, it can be 2. Let's see it here. If this one is too small, you can take 2 like this. It comes small to get there and it reverses. This is a good place to enter. Once it's going up, you can put this one here and enter the market from there. Let's go to March. Let's go to the following day. This 3rd, 4th, Friday. Normally, I don't trade on Friday, but let me still show you. I don't trade on Friday. I don't trade on Monday. One, 2, 3, 4, 5, 6, 7, 8, 9. I don't trade on Friday. I don't trade on Monday. I have my reason to that. It's a hidden secret that I teach in my mentorship class. So you don't expect me to be disturbing myself, racking my brain, looking for entries on Friday and Monday. Let's go to Tuesday. Another Tuesday. Tuesday, okay. See, Tuesday is a ranging market here, but let's count it. 1, 2, 3, 4, 5, 6, 7. You mark this area, you go to 5 minutes, you are going to get your other block there. You play it up, you get another one, you play it up. Here on this Tuesday, I got like 5 entries. This one up here, another one, then 3rd one, 4th one, then the reverse, which reversal that I teach in my mentorship class. Another one here, Wednesday, 1, 2, 3, 4, 5, 6, 7. I mark this area, I go to 5 minutes, look for order block, then I play it up. Thursday, 1, 2, 3, 4, 5, 6, 7. I mark the top there, I go to 5 minutes, I look for retest upward, then I play it down. Another entry, it's coming like this. I put my order block again there. I roll it downward. So when you know your timing, the characteristics of your timing, you know that from 7 to 9, that's when you are going to be getting your highest of the day in 70% of the time, except if there's high impact news or some factors that can change it. But if you play it 10 times, at least you are going to get 7 times. It's going to be accurate. So 1, 2, 3, 4, 5, 6, 7. You've gotten your highest of the day from there. Go to 5 minutes, look for your order block, then let it retrace back to it, then you trade. The reason I put all this mark here, all these mark are order, they are another price action that I use. There are some that I use block shape to mark. There are some that I use lines to mark. That's why you see all these lines, it's either the market react to this line or it reacted to the space. So those are the things I use. There are 7 price action that ICT, institutional traders use, and big banks and hedge funds, they use in getting into the market where they participate. This is what ICT taught us. But it must tally with time zones. When you are looking for all these things, you must look for it at a specific time of the day. You can't just get into the market anytime and said you are looking for order block. If you see any other block, it can't be accurate. Where you are going to put your stop loss is going to be wide. So anything you get at that particular time of the day and it tallies with your time zone and your price action, ride it. If it is like this Friday, I don't trade on Friday. Even if it reverse, let's say you mark this area 1, 2, 3, 4, 5, 6, 7, 8. Let's say you mark this area and you ride it. At exactly 12, it will reverse. Another secret. 11, 12, you should be expecting reversal. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. See what happened. Let's go to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. What happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. What happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It moves, but it might not be too much, but there will be action that will take place. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. What happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. What happened? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. It will give you up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Then this one move up, but it still come down. 8, if you know time-based analysis very well, if you try it 10 times, 8 times is going to be accurate. And if you merge it with your price action, is going to give you excellent results. You can never lose again in Forex. You don't need indicator, you don't need anything. You don't need to master any pattern. Did you see me talking about doji or anything? No, you don't need it. I'm telling you the truth, you don't need it. There are a lot of secrets to all these things, time-based analysis, but I'm just giving you this as a tips. My students in the mentorship class, they know other ones that have taught them to be self-sufficient and be disciplined. And I don't give signal, I don't give anything. I'll just tell you, this is my bias for the day. We're expecting the market to go up, and they know exactly when to enter. They know the price action where they're going to be looking for the entry. It's either order block or the remaining 6. Then they know the time they should be getting out of the market. They know the time for reversal. They know where the reversal is going to take them to, and they know how long and how far it's going to go. Those are other things that I teach in the mentorship class. So this is the tips. Another secret that I said I should open up to the world today. God bless you.